I'm going to show you proof the Federal Reserve has lost control of your mortgage rate. They cut 175 basis points, and your rate barely moved.
Hi, this is Michael Regan with Regan Team Home Loans, and welcome to this week's Real Estate Roundup for Wednesday, August 26, 2026. First to the Case-Shiller Home Price Index, and it showed that home prices were up 1/10 month over month, and nationally they're up 1.5%, and then their 20-city index, they're up 2.1% year over year. So what we're seeing is not mass appreciation, but we are seeing appreciation, and it truly is meaningful, compounded over time. So this overall, considering the elevated rates that we have, shows that there's still a lot of demand for housing because we're continuing to see home prices increase. Now to new home sales. So new home sales clearly were impacted by the higher mortgage rates because this is for July of this year. And month over month, the new home sales were down 10.5%. Year over year, they are down 6.3%. Now, that being said, it just showed the month supply at 9.6%. But of the 488,000 homes they're counting, only 117,000 are completed. When you look at the actual month's supply, it's way under that 4.6 months, which is what's considered a neutral market. So there aren't a ton of new homes actually ready to be sold. But nonetheless, the higher rates did hurt new home sales, and we saw that they are down year over year. Now, it's not a disaster. Prices aren't, falling and going to nothing. It's just that it is absolutely slowing because of the higher rates. Now to PCE, or personal consumption expenditure. So this is a measure of inflation and the Fed's favorite. And it showed that month over month, headline and core were both up 0.2%. So headline is at 3.7% year over year. Core is at 3.3%, and this met market expectations. Now, what we're going to probably see in the next couple months is that they're going to change some of how they do the inflation numbers, because a big part of the inflation that's happened this year, especially in this last month, almost half the inflation was portfolio management fees, which is actually not inflation. So think of this. You have a certain amount of money with your financial advisor and they charge you 1%. Well, as your portfolio goes up, they're still charging you 1%, but their fee has gone up because your portfolio is worth a lot more. But that's not true inflation. The fee that you're paying to the portfolio manager is the same. So it hasn't changed. You haven't gone from 1% to 2%, which would be inflationary. You've just stayed the same. It's just your portfolio has increased, which is a good thing. So they're going to change how that's calculated, and that should reduce their inflation numbers a little bit. So there's little tweaks like that where just some of these things don't necessarily make sense and shouldn't be inflationary because they're not truly inflation. So it'll be interesting to see what this does in the months ahead. But nonetheless, we did come in at market expectations. So at least, while inflation is not where the Fed wants it to be, it's certainly not out of control like it was in 2021 and 2022. Now to what the market's doing today. We're up 14 basis points in the Fannie Mae 30-year fixed, and you'll see the chart. Red is bad for rates, green is good. So we've had a mixed bag that some days it's better, some days it's not. It just seems that the news cycle, it just depends where the market is going on a whim because there's not a lot of direction. Now, the good thing is that we had tame inflation. I mean, it was what the market expected. So you'd think that the rates wouldn't be impacted too much, and we're still down 15, which is unfortunate. But nonetheless, we've been very steady the last, almost month where we are in rates. So the good news is they're not getting necessarily worse. It's just they're not getting better at this point. What I did want to talk about was a lot of misinformation out there that I'm seeing about the Fed controlling mortgage rates. So at the beginning of this video, I played you a clip of some of what's being produced out there showing, hey, the Fed's lost control. Your mortgage rates, they cut rates and then your mortgage rates haven't gone down. What the heck is going on? They've lost control and the sky is falling, and all these things to scare the bejesus out of people. And I just question why there's such a push to not have people be homeowners, that we see that homeowners have an immense more 40 times plus the net worth of non-homeowners. Why is there so much kind of negative media attention about home ownership? Why would they want to keep people poor is really what I'd like to know. And so that clip that showed is what people are seeing, that telling people that the Fed has lost control and they aren't being able to help mortgage rates. But the thing is that the Fed actually has no direct control of mortgage rates. They control treasury prices, which there is some correlation to the 10-year treasury in the mortgage market, but not exactly. And they don't control the mortgage market. The overall market controls the mortgage market. So there's a lot of misinformation and a bunch of junk about people, why they shouldn't buy a home, that it doesn't make sense, all these things, but none of them are looking long-term. They're all there to just sell headlines and sell you a bunch of junk that in 10 years, when you can go back to them and be like, hey, one family bought a house and now they're a millionaire. Another family continued to rent because they listened to these videos and they're basically in the same position that they are now. And now they really can't afford it because home prices have gone up so much and their rent has gone up so much. And now they have to move to another city because they can't afford where they live. Where if they would have bought a house, they would have been comfortable and not having to worry about their mortgage payment continue to go up and up and up like their rent. I just wanted to point that out. There's so much negative attention on why you should not buy a house. And it makes me really question what their true intent is and why they want to keep people from building wealth. I'll get off my soapbox now, and that's it for this week's Market Wrap. Don't forget, we specialize in reverse mortgages for seniors and bank statements loan for self-employed business owners and investors. Have a great week.